Hello traders and welcome to Forex Friday. It's Tune Up on here, founder of Master Markets Illiterates Conference and the Traders Open Day. So today we're going to be talking about, before I do the trade reconcile for today, we're going to be talking about the three basics that every trader must know. So the first point is that yesterday as we were exhibiting in the property exhibition, a lot of people, usually a generic comment that usually beginners usually ask before they be introduced into the trading world, or even a trader who has been just trading for about 1 or 2 months or so. Usually one of the common things that most beginner traders usually talk about, or those who have not even started trading at all, they usually say that trading is very risky. Trading is very risky and it's like gambling, borderline gambling. So that is why the first basic is very, very important for any trader, and that is what we call risk management. Okay, risk management. And the risk management is meant to be done on a percentage basis, and one of the most common ones that's ever found, and it's across all kinds of literature, is the 1% risk management. Okay, and the 1% risk management basically says that you're predetermining how much you're going to lose even before you enter a trade. Because as professional traders who wants to stay in the game for the long run and make consistent profits, you got to consistently focus on the risk, okay? Because the upside will look after itself. So on a 1% risk management, let's say you have a £10,000 account. On a 1% basis, that's going to be £100 risk that you are going to maximum take on that trade. Of course, if you do want to increase this, then you can, but we would usually suggest for beginners that you don't do that, because just start at 1%. As intermediates go by, you can increase this depending on your maximum drawdown, okay, which is in the previous videos what I've talked about. Now, the second basic point that every trader must know, especially beginner traders, and also the foundation is so important as you go up to becoming an intermediate and a professional trader, is that you must have a reasonable capital to start with, okay? Because one of the myths that people usually have is that they usually think that you need a large capital, like about £100,000, £1 million and all that. That was true before, but now with the advent of many brokers and high leverage points that you do have offered by the brokers, you don't need that much of a high capital. You can have a reasonable capital to start off with. You can even start off with £5,000, or you can even start off with minimum at least about £2,000. Now, if you go anything below that into about £100 or £500 or all that, which some traders do, you have to risk manage accordingly. And also another thing is that the capital amount needs to be decided upon what I've mentioned here, which is your maximum drawdown. And I did do a previous video on that in our YouTube videos, or you might find it even on Forex Friday. Okay, good. So that's the second point. So which is, you got to start a reasonable capital, but it can't be too low as well, because it's got to cover your maximum drawdown. Okay, that's very, very critical. All right, so it's going to be reasonable capital, but it doesn't need to be too large, like about $500,000 or 1 million. Now, the third basic point, what we want to every trader to know, is that you're not here for the short term. Okay, you're here for the profits to accumulate. Just because you take one big profit doesn't mean you are now a successful trader, or you took one small loss doesn't mean that's the end of trading. You got to focus on the third point, which we call cumulative profits. Okay, cumulative profits. It's a matter of cumulative trades, if you may say. All right, just not about one trade. It's about 10 trades, 20 trades, 100 trades, 1,000 trades. All right, and you got to then result in consistent profits. Okay, that's what we're saying over here. Cumulative trades to give you consistent profits. Cumulative trades to give you consistent profits. So therefore, for these three basic points, and the final point, which is the third point, just a bit more re-emphasis on that, what I do want to mention is that in terms of this cumulative trades giving you consistent profits, therefore you always got to look at the bigger picture, and also know that you've got an edge, that the strategy can then give you finally a net bottom line of profit. So all these three factors, three basic points, what I've mentioned to you is all towards one main point, which is you must have a strategy with a strong edge which will help you achieve the third point with the other two in place. Okay, so 1 plus 2 will give you 3, and which comes from a strategy with a strong edge. Okay, a strategy with a strong edge. All right. Okay, so that's that on this topic on Forex Friday that I usually cover. Now let's do a quick reconcile. Let's do a quick reconcile of the trades that we have done. Before that, just a quick summary on the three basics. So the first one we are saying is that basically risk manage. Okay. The second is what we are saying is basically a reasonable capital. The third one is what we're saying is a cumulative trades. Okay, the profits are made, the consistent profits are made out of the cumulative trades when these two are in place. All right. So with that, let's go and take a look at the trade reconcile. How have our strategies done for the week? Okay. So we're starting off with Morning Glory. Morning Glory had a very good return for the week. So what we did have is basically we had 179 pips from Morning Glory over here. As you can see, it's 55 plus 8 is coming out to 63, but do remember on the weightage basis we do put 3 times that. Okay, so it was 165 plus 24 because we do 10 pounds a pip there. We did 30 pounds a pip in these instances because we got our whole money management in place in terms of taking these positions and based on our maximum drawdown. So based on that, 165 plus 24, Morning Glory did 179 pips, 179 pips for the week ahead. Okay, we had our biggest run actually on the 12th of June with it running 55 pips. Okay, but do remember I've mentioned over here that this is a system trade because we were not next to the computer. We had missed this trade on actually the Monday, but according to the system it did make money on what should have been done. Right, now the next one is on cable on the 15th of June. That was just yesterday before the Bank of England interest rates came out. We had a small profit there on 8 pips as well. On the other accounts that we didn't have this trade running on a longer move, we did have a little bit of gap up, and we got to check that with our broker as well. So if you do have a big gap out of your stop, which is like 20-30 pips gap, I would recommend that you do check that with your brokers as well. Okay, because it shouldn't be that worse of a fail. Right. Now, so that was what Morning Glory did in terms of the week. No trade today. We didn't have any trade today at all because of the mismatch between the higher time frame and the lower time frame on cable. Okay, right, now moving on swiftly to smart money. Smart money took a bit of a hit this week. Actually, we had 3 successive losses, but do remember that smart money is a trending strategy. Okay, it's a trend-based system, so do remember that the market only trends about 20 to 30% of the time, so this is expected. You must know the reliability of your strategy to continuously keep on the trading. Okay, as you can see over here on dollar yen over here, let me just show you this on the chart over here in terms of dollar yen. What we did do in terms of smart money. Do remember, as a recap, smart money is capturing the turning points in the market and riding the wave. Okay, that's what we are doing here in terms of smart money. Now, in terms of that, we did take a long position here in terms of dollar yen, in terms of this particular point over here. And when we did do that, we did do an aggressive cover here. We minimized our loss in terms of dollar yen. Okay, that's what we did in terms of the week, in terms of smart money. That's what you got to do. You got to constantly know how to manage your risk in your strategies so that you do not give back too much cash to the market. Okay, now euro dollar on the other hand, we did take a position on this as well. It did retrace back again. Very minimal loss on that as well. Didn't lose our initial capital risk on it, but dollar Swiss we did take a full hit, and sometimes that's going to happen. As long as 80% of your trades are not hitting your initial stop loss, you're still fine. Do remember the third point which I told you about cumulative trades. They're giving you consistent profits. Okay, so smart money on an overall lost about 131 pips this week. Okay, 131 minus 131 is what we had in terms of smart money. Right, so when we add up 179 minus 131, that's a total net of 48 pips in terms of the two strategies. Okay, Money Bars on the other hand did not have any trades as of for this week. It was only net just flat, really. There's no trades taken, so 0 pips on that. Okay, so that's that on the trade reconcile. So we finish off this week with a positive 48 pips up. All right. Okay, so good. So that's all from me in terms of the topic and the trade reconcile for Forex Friday. Any questions at all, always do remember that you can always email us or post us on Facebook as well. All right. Okay, so that's all from us for today. And as we always say, till the next time, stay disciplined, follow our plan, and keep trading like your master.